Hi, welcome back to the second video for chapter 7. Now uh, we are going into the second part of the chapter in which we want to understand what is profit and loss statement. I guess some of you who have gone through the principles of accounting class, this word profit and loss statement is not a new thing. Guys, profit and loss statement also is known as income statement. Usually we will be recording all the profit which is income into this statement. Guys, how does actually we calculate the income or profit? Guys, we calculate the profit or income or even loss in the profit and loss statement by first we state all the sales that we make, and then we minus all the expenses that we pay, then we know how much is the profit that we gain. So profit and loss statement is actually a statement in which you write down all your sales, you will minus all your expenses and costs to see how much you are making profit or how much loss you have suffered during the accounting period. So profit and loss statement is a general statement of how you calculate the profit and loss. Next, I would like to share with you another term in another concept in accounting, which is the cost of sales or cost of goods sold. When you learn about profit and loss statement, you might see this word cost of goods sold. Guys, looking at the name of this concept, it refers to cost that you use to make sales. That's why they call it cost of sales. It is cost actually you use. It is actually cost that you spend in order to make sales. In restaurant, when you are opening restaurant, you are actually selling food and beverages. So cost of sales is actually cost of food and beverages that you sell. So that is cost of sales or cost of goods sold, COGS. So in short, if people ask you what is cost of goods sold for restaurant, it is actually cost for the food and beverage that you use to generate sales. It is actually the items that you take out from the store, you cook and then you sell. It is actually the beverage or drinks that you take out from the storage and sell at the bar. So what is COGS for restaurant or cost of goods sold? It is actually cost of food and beverages you sold. So that is very simple concept. Next, I would like to discuss with you the various type of expenses in your restaurant. Guys, what is expenses? Expenses means cost. Expenses is another word for cost. So restaurant operation will have different types of costs. So I would like to discuss with you a few today. Number one of the largest operation costs for one of the largest expenses that restaurant will need to pay is the labor cost. Labor cost is actually the salary that you pay to the workers. Next, maybe the benefits that you give to the workers, for example, the medical insurance. Maybe you will pay for the uniform. Maybe you will pay for the hospitalization. Some restaurant will give the employee meals to the labor. So all of this is considered labor cost. Not only salary, not only wages, labor cost includes other benefits that you need to pay for the well-being or welfare of your labor. Next is operational cost. This one is a very direct cost to your operation. Guys, operational cost, we can see the three costs. Number one, food cost, beverage cost, and number three is actually labor cost. And actually, you can also include number four, which is your utility cost. Next is occupancy cost. Occupancy cost refer to rental cost of the building. You occupy the building, then you have to pay the rental cost. Guys, when you are renting a building, we call it, you pay the occupancy cost. But if you buy the building, you have bought the building, the restaurant building, you don't pay any occupancy cost. Next is indirect expenses. Guys, these are all expenses that is not direct to the operation. It is actually other costs like marketing, and also depreciation. We will discuss afterwards the depreciation, tax to the government, and other indirect expenses. Guys, next is management labor and also bonus. This one means salary to the management. This one is labor, means staff, but this one is management labor. So you also need to pay them the salary, and also you need to pay them the allowance, many kind of allowance for the manager, such as entertainment allowance, such as the cost of living allowance, such as the car allowance, telephone charge allowance. A lot of allowance you will be giving to your management team. And also bonus. Bonus also is considered labor cost. When you pay to labor, the lower level labor, also we consider the bonus as one of the labor costs. Next is sometimes you will pay loan. If you do not rent the building, you might be buying the building using loan. So the loan paid to the bank is one cost. And then also lease payment. What is lease payment? Sometimes certain restaurants, they do not buy equipment, but they rent the equipment. Guys, leasing means renting equipment. Yeah, sometimes the coffee machine, they will use the, some restaurant or coffee house, they will simply rent the Nescafe coffee machine, which is very sophisticated formula, with formula of coffee and so on. They just rent and pay every month. So lease payment refer to equipment renting payment. Next is depreciation. What is depreciation? It is actually non-cash. What is non-cash? You don't pay. Guys, it is one type of cost, but you don't pay. Tax deductible expense. Non-cash expense is number one, means you do not pay the cost. It is deductible from tax. What does it mean? You can include in your profit and loss statement. And when you include in your profit and loss statement, guys, I think you know the formula, sales minus cost is profit. When you increase the cost, by including or adding the depreciation, your cost will be increased. What will happen to the profit? Lesser profit. So tax will be given or will be based on the profit. So lower profit, you will lower tax you will pay based on lower profit. So depreciation, we will put in the what we call as a profit and loss statement, so that we can get a certain tax deduction. But it is non-cash. Why it is non-cash? Because it is actually the decrease in usefulness of equipment and plant assets. Guys, what does it mean? Guys, when you buy equipment or any assets, I give you example. If you buy a van, if you buy a van for catering, for example, today you buy the van is 100,000, but when you want to sell back the van after 10 years, how much is the value of the van? You buy 100,000, and then after 10 years, how much is the value? It decrease in the value. So decrease in the value of van or other asset, you will include in your profit and loss statement, so that you will increase the cost, and you will have lesser profit, so lesser tax. Lesser profit means lesser tax, and you will put it or account it in your profit and loss statement. Guys, I see you in the next video.